BTC and ETH. That's it. You don't need anything else. And that's one of the reasons in Q4 you had a complete collapse of what I call the poo-poo coins, and they haven't come back. There is no good news for poo-poo coins. No indexer is going to buy any of them. They're worthless in terms of capturing alpha because there's such a correlation between a poo-poo coin and BTC. And until you somehow differentiate that so that you could outperform crypto by owning a different basket.
Well, what do you guys think about that? Mr. O'Leary out here talking about the poo-poo coins. He said, I don't know that he's wrong. I mean, he said that you can capture 94% of the crypto alpha just by holding Bitcoin and Ethereum. We'll touch more on that in a minute. Man, let's do a live look, though, into gold and silver, guys. Let's see what that's looking like here. Oof. Almost a $38 trillion market cap for gold. Oh, buddy. Silver up another 10% today after having a little bit of a pullback yesterday. Tell you what, I took some profits on my silver and I moved into copper. I'll talk about why, but the shiny commodities, man. It's been quite a year. I'll tell you what, last year I started talking a lot more about macro. I started talking about gold, silver, copper, uranium, the energy plays. They did very well last year. You know what didn't? Well, you guys know crypto had a really tough year. Will we catch up? I don't know. I'm gonna go over some metrics in the session today as to what we might be able to see. You might have seen that DXY, the dollar index, has fallen to the lowest it's been in years. What does that mean? I think there's some misconceptions out there. People are thinking that means that we're going to see inflation, that it's reducing the purchasing power as far as goods and services in the U.S. It's not the case. DXY is a totally different measure, but I'm going to cover that. But the main thing, of course, is the FOMC meeting was today. We saw Mr. Powell. Rates were unchanged, as you guys know. I'm going to talk about the takeaways there. We only have 2 more meetings with Mr. Powell, Mr. Jerome Powell, before we have our next Fed chair. By the way, we have a surge in one of the candidates for the next Fed chair, one that I've been highly touting. We'll talk about why that is. But what are the main takeaways? I actually took some notes, but I'm going to talk about some of the takeaways that they mentioned here, and we're going to break them down. No change. That was expected. There was like a 99% chance that we were going to see no changes. No shocking there. We had 2 members dissent. Stephen Moran was one. Of course, that means that the decision to not change rates, there were 2 members that disagreed with that decision effectively. One, not a shock, guys. Not a shock at all. Stephen Moran, he has been a dissenting member. The big difference here is that he actually has been dissenting in favor of a 50 basis point cut. This time he was in favor of a quarter point. The other is, of course, Mr. Christopher Waller. We'll talk more about that in a minute. Says it was a snoozer. On many occasions, Powell decided not to answer certain questions. I'm going to talk about what those questions were, and says that from an economic standpoint, we saw solid growth, and that the near-term tariff-fueled boost for inflation will recede. And in fact, he made some interesting statements around that, and weren't any major moves in markets. Okay, so I want to break these down a little bit. Number one, no one expected him to cut rates. The big question, of course, though, is will we see more rate cuts? Let's take a look at this tab here. This was the meeting today. There's 8 meetings per year from the Fed. We have 2 more under Powell, March and April. May 15th is when his term's up. So the next 5 meetings will be under the next Fed chair. Who that will be is still open to debate. I think that decision, when that comes down, it could be any day now, could have a major impact on markets. Now, what are the betting markets saying? If we look at the breakdown here, obviously this has already been settled for January. March, we saw a pretty big shift today. Actually, let's look at the daily here. Very likely there's no rate cuts coming, at least in the March session, and then of course one more under Powell is in April. We saw a big drop off here as well. So 76% chance of no change. That was based on the comments he made. So here are my major takeaways from what Powell had to say. Am I coming through okay? It's a horrible internet connection, so I don't know. Hopefully my voice is at least coming through okay. I see I'm lagging a little bit. So one of the things he mentioned, as far as obviously there's a dual mandate for the Fed, right? They need to have stable prices. They need to support the job market. Interestingly, when it comes to inflation and tariffs specifically, as you all know, most economists were saying inflation is going to go, rampant. It's going to be crazy. It's not what we saw. Okay, and not surprising. If you look at the MIT report that came out after we had 20% tariffs in the first presidency under Trump on China, we found that there was a 0.7% one-time price increase to the consumer. So it shouldn't be surprising that we haven't seen the inflation that all these economists were warning about. And today, interestingly, Powell said that he thinks that most of the tariff-related inflation is behind us. And effectively, it should be a one-time price increase and then stabilize from there. That's his sentiment. The other part is the job market. And there were some statements in the last FOMC that suggested that the job market was worsening. Some statements today in particular that he thinks it's levelized. The job market has levelized, is not getting worse. In fact, we are seeing that there's some private sector growth. That's interesting. And they asked, what would have to happen for you to cut rates? Basically, he said the labor market would either have to deteriorate or we would need to see inflation numbers come down. Okay, obviously, that would lead to more rate cuts. Now, of course, we only have 2 more meetings with Powell. After that, I think that whoever's in there is going to be cutting rates more drastically. He did talk about GDP growth. We've seen very strong GDP growth. A lot of that, though, is attributed to AI data centers and the build out there. We also see that consumer spending is very much tied, and he mentioned all this, very tied to the top earners. We've seen more than half of consumer spending really taken on by the top 10% of the wealth in the country. So Main Street, your average household is still struggling. What's interesting, though, is that if you look at the survey data, the sentiment in January has been the worst we've seen in a long time, really since we first put tariffs on last year when it was at rock bottom. We're now seeing that GDP growth and spending has stayed strong. Sentiment is very low. So all that to say, the overall market is showing strength and a lot more perseverance than was expected. So I don't know. I think we'll see what the inflation numbers look like. And actually, that is something I want to bring up here, of course, is what do the inflation numbers look like? Well, if you look at Trueflation, as we are seeing this fall off a freaking cliff. And of course, this is not what the Fed and the government goes by. This is a leading indicator in many ways. They use a lot more real-time statistics, a lot more real-time measures, whereas CPI uses a lot of survey data, tends to lag behind the actual inflation that we're seeing. But if this is any indication of what's coming, there's going to be plenty of reasons to cut rates here into the future. Now, if we look at the expectation in the betting markets, we haven't seen that big of a shift. This is for expected rate cuts in 2026. Right now, one rate cut has a 12% chance, 2 has a 23% chance, and 3, of course, is a 25% chance. Note that we have 7 more FOMC meetings this year, 2 under Powell, 5 under the next Fed chair. I think there's still a chance we see 1 rate cut under Powell. That would leave 5 more meetings for the next Fed chair to cut rates. And I wouldn't even say a 50 basis point cut's off the table. So I think that the market right now, what's being baked in other words, is conservative. I think there's a lot of upside that can still be baked in. When we had the announcement of who the next Fed chair is, we could see certainly a big move in markets based on who that Fed member is. Now, who might that be? I thought this was interesting because I mentioned this earlier. The two dissenters, of course, Stephen Moran was expected. If you remember, one of the Fed governors stepped down early. Trump planted Stephen Moran in there, knowing that he would be voting in favor of rate cuts and be aggressive in that. So no shock there. Christopher Waller, though, is a dissenting member. In other words, he did not agree with Powell's decision not to cut rates. He also so happens to be one of the top candidates as the Fed chair. He's my leading candidate, the one that I've been talking about a lot, now up to 18%. He continues to rise, up 9% today. I've been very public and transparent about this. I mean, I put a decent sized bet on Christopher Waller on Kalshi. Right now, that's very much in the money. I think he was at like 8% when I did that. Rick Ryder seems to be falling down the ranks, worse, even at 28%. Guys, the big story here is if it's Ryder, if it's Waller, if it's Hassett, very good for our bags. Warsh, I would expect a very negative reaction from the markets. I don't think it's going to be Warsh. But I would love to see it be Chris Waller, because not only would that be good for our bags, but be good for my bag individually, because I obviously put decent sized bet on him on Kalshi. But this could be announced any day. This is something that I think the markets are going to react to quite a bit. I think there's a high chance that it is going to be a favorable reaction. But I do want to talk about a couple of things that Powell wouldn't answer. One, he was asked about whether he'd want to stay on as a Fed member once he's replaced. He was not answering any questions about that today. Not surprising, guys. There's like a potential lawsuit against him right now, which is crazy, or investigation, I should say. I don't think he's going to stay on after what he's had to deal with under Trump. The other thing they asked him about was Japan. You guys know Japan has been seeing their bonds explode, okay, because they stopped printing money. The Bank of Japan stopped printing money and buying up their own debt. And it's been impacting the dollar, actually. And he was asked about that. He didn't answer most of the questions, but they did ask him one thing. They said, do you think that the U.S. is on the same path as Japan? Is there a concern that we could see our currency completely destabilize? His answer to that, and I'm seeing a lot of people misconstrue this, but he said, I don't think there's any question that the fiscal path that we're on is unsustainable. Meaning, not only our national debt, but the deficit, because we are currently running a $2 trillion a year deficit. He said that path that we're on is unsustainable. However, if we rein things in, we can get back on track. Okay, so I thought that was a really important statement. And there's a lot of people that are saying, it's unsustainable. There's no coming back. We'd have to make some drastic moves to come back, for the dollar to remain the world reserve currency. But I don't think it's any risk anytime soon. Okay, anytime soon at least. But that brings me to the DXY. Okay, so looking at trueflation, that's a measure of your purchasing power here, domestically against goods and services. Obviously, as inflation goes up, your purchasing power drops. Something completely different, though, is the DXY. Okay, and we have seen this drop to the lowest it's been, drop below 96 earlier today. The lowest has been since 2022. I think this is really important to differentiate here, because there's a lot of people saying, oh, DXY, like that means that your purchasing power is dropping in relation to other currencies. And this is something I read a lot about in some macroeconomics books last year. DXY, actually, let me pull up the definition here for you guys, but it is the measure of the US dollar against other global fiat currencies. In particular, some are weighted more than others. Okay, so Europe is the most heavily weighted currency. You have the yen with Japan, the British pound, Canadian dollar, you have the Swedish krona and the Swiss franc. So this is a measure of the US dollar strength against those other currencies. This is not a measure of inflation here domestically, okay, and the purchasing power there. Interestingly, you would think, okay, weakening dollar is really bad. Let me play this statement though, because this is getting a lot of criticism from people that I don't think understand macroeconomics. And this is when Trump was asked about it, what he had to say.
Well, Mr. President, with the current value of the dollar, do you think it's declined too much?
No, I think it's great. I mean, the value of the dollar. Look at the business we're doing. No, dollars doing great.
Well, Mr. President.
So there's a lot of debate on this. They're like, oh, what an idiot, blah blah blah. Okay, like yes, he says a lot of stupid things. Don't get me wrong, but there's been decades now where China has manipulated their currency, kept it weaker than the US dollar on purpose. And the reason for that is if you have a weaker currency, you're able to export. Okay, then it makes sense. If the country you're exporting to has a stronger currency than yours, that gives them more purchasing power. It helps domestic manufacturing and it helps exporting. It also, when your currency weakens, tends to push asset prices and investments higher. So this is something, gosh, and I know I've said this a million times, but the interview with Scott Bessent about a year ago with Tucker, this is something he mentioned, is that China has been manipulating their currency for a long time, devaluing the currency, the US dollar against other currencies, DXY, will help manufacturing in the US. Okay, it'll help us to export, right? It'll make imports more expensive. Again, bolstering the manufacturing here. And that's the bet they're making here. This has been the plan, guys. The plan has been to use tariffs to negotiate investment into our country, to bolster our manufacturing, to grow the private sector. Next thing that they're really focusing on is deregulation, and that should stimulate job growth. Okay, and that's the bet they're making. Whether they execute on that remains to be seen, of course. But the things I want to call out and why this DXY is so important, when you look at the timeline here, the last time we saw us really drop, because we've been, the dollar's been very, very strong. The last time we saw ourselves drop here was really, I would say back in 2020 into 2021. And then we started seeing the dollar really gain strength here in 2022. That also happens to be when the Fed started raising rates. And that's something you generally see. If you raise rates, that currency normally strengthens against other currencies. But the timeline is really important here when you compare it to what we've seen with crypto in particular. When we saw the DXY drop and that currency value drop against other currencies, it was also when we were cutting rates, okay, when we drastically cut rates because of COVID. Let me pull up the chart here for crypto. That's also right here when we saw devaluing is when we saw a huge surge in the crypto market cap. Now, when we saw us break the other direction where our currency, we started raising rates, our currency, the DXY got stronger against other currencies, that's when the party stopped and we moved into the bear market. So this is what we are seeing. We're seeing the opposite right now. We're seeing DXY drop again. We're in the process of lowering rates, in the process of quantitative easing. That's not what we were seeing back here. Okay, when the bull market ended. That is what we are seeing back here when we saw a major move up in risk on assets in the stock market, in crypto. So we're actually fostering a period right now where things should grow. Risk on assets should actually do well based on the macro backdrop. And just to show you the timeline on the rates, again, dropped here. That's when the DXY also dropped. That's when we saw risk on assets do very well. And then, of course, here's where we saw DXY strengthen as we raised rates against other currencies, and that's where we saw the bull run end. The other thing I want to call out here is that the business cycle, of course, our boy Raul Paul talks about this a lot, but we haven't seen a full bull run unless we've been in an expansionary period with our business cycle. And anything above 50 would indicate that in the ISM manufacturing PMI, anything over 50 would indicate that we are in an expansionary period. You'll notice this coincided with the bull run back in 2017, 2018. As that contracted, we saw the end of that bull run. Saw the same thing here, right? We saw a huge expansion way up, coincided with the top of the bull run in the last market cycle. And then we saw rates go up. We saw us contract, right? They're slowing the economy down. We have not seen any expansion in the PMI this whole bull run. Okay, we've been in a restrictive period with the Fed. We are starting to see that shift. Okay, we're starting to see the DXY. Notice the DXY also having to coincide with these business cycles, interestingly. So we are seeing things really, we're entering this period where we should start to see expansion like we saw here. That also coincided with the bull runs, coincided with risk on assets, expanding and doing well. Those are all good things. And then the quick question here, and this is something I just brought up is, will we see all the things come together that they've been planning? Okay. I mentioned that, the tariffs have been, a way to foster growth here domestically. Here are some of the pledges they've had. And this is, I think, the verdict's still very much out here, guys, but these are the investment pledges we've gotten. The EU, $600 billion in investing in the US. Japan, $550 billion, $1 trillion investments and loans. You have South Korea, it's $350 to $450 billion in shipbuilding, semiconductors, nuclear power. Taiwan, $250 billion towards building out, TSMC plants in the U.S. Switzerland, $200 billion. UAE, $1.4 trillion over the next decade. Qatar, $1.2 trillion. I mean, the list goes on. And that is the question. Do these investments come through? If they do, and we see deregulation, we see the private sector continue to grow, I think we are going to move into an expansionary environment. We could see risk on assets go absolutely parabolic, guys. Obviously, there's no question. We're seeing all-time highs in the stock market, S&P 500, Russell 2000, gold, silver. Everybody's been having a party except for crypto. I think 1010 is the big reason for that, where we got derailed. Trust was broken. There's no doubt about it. In fact, if you look all over the timeline today, everyone is talking about CZ and Binance and 1010, and everyone's like, oh man, it's like, yeah, you guys are just figuring this out. We've been talking about this for fucking months, man. I have a video I put out 2 months ago breaking everything down that happened with Binance. We knew about this, guys. Kathy Wood came out today, was talking about this, by the way. We're starting to see some bigger voices talk about how Binance screwed things up on 1010. So I think it definitely comes down to a question of, when is the trust going to come back? Liquidity's there, guys. Liquidity's sloshing out there. I know that there's a lot of people that are saying that the bull market's over, and they're looking at the chart from the last market cycle. I'm not saying we can't see further downside, but I don't think we're going to have this extended bear market, guys. I really don't. When you look at the backdrop, the macro backdrop I just talked about, it is the opposite of what we saw there. We had 44% of US dollars created in 2020 and 2021. Think about how much liquidity is sloshing around in the economy right now. We are in unprecedented times. And I think, when you look at the AI situation and the efficiencies that are going to be driven there, I think you easily make the argument that we're about to have a huge expansionary period. And I think it's actually remarkable. We've seen Bitcoin hit new all-time highs, and we've seen some of the price action we've seen in crypto without expansionary situations in the economy. So I think there are brighter times ahead, but the trust situation is real. And I think one of the things that can help would be if we get the Clarity Act passed, and there's some news on that today. Obviously, the big holdup there has been the banking sector. They're worried about competition. They don't want stablecoin issuers to offer yield that would make people pull money out of their bank account. They're actually in this article, and this is from Reuters. They talk about how they're estimating that over the next 5 years, they think $500 billion could be pulled out of the banking system if stablecoin issuers can offer yield. It's kind of BS, guys. Really. I mean, your bank takes your money, offers you next to nothing. They can buy treasuries. They can, invest at other places, get a huge spread on your money. So they don't want this competition, but this is important. On Monday, the executives from banking and cryptocurrency industries are going to meet to try to get on the same page here with this legislation. So there's still a chance this thing can get passed. I think this would do a great deal of building trust back in the sector. Right now, 32% chance of this happening before May, 46% chance before June, and 57% chance this year. So let's see what happens Monday. Let's see how these odds shift in that period of time. Of course, I actually haven't checked the odds of a government shutdown because that could happen this weekend. Let's see what that looks like, because that could put a whole wrinkle in all of that. We saw that. We saw the big surge up just a few days ago. It seems to be coming down slightly, but still a 2/3 chance we see a shutdown again on Saturday. That would obviously not be good for our chances to get this thing passed. So we need to keep an eye on that, of course. Oh, okay, so that's the macro backdrop, guys. There's a lot going on there. I want to go back to this. This is what I opened up with, but I'm going to play it again for people that weren't here.
And when you do the data, it's quite depressing. You get 97.2% of all the alpha of the entire crypto market with simply two positions, BTC and ETH. That's it. You don't need anything else. And that's one of the reasons in Q4 you had a complete collapse of what I call the poo-poo coins, and they haven't come back. There is no good news for poo-poo coins. No indexer is going to buy any of them. They're worthless in terms of capturing alpha because there's such a correlation between a poo-poo coin and BTC. And until you somehow differentiate that so that you could outperform crypto by owning a different basket, but you can't. In 16 years, you can't beat just ETH and BTC. And so it's a very sobering message that they're giving the market about, and I know there's advocates and that they love this blockchain product or that blockchain product. I'm sorry. No.
Okay, there's a lot to unpack there. And I don't know. I mean, do you think he's wrong? I can't say that he is. Okay, I mean, look, Bitcoin has outperformed alts. Yes, in short periods of time, you can see alts outperform Bitcoin and Ethereum, right? If you time it right, if you're in the right thing. But I think there's a lot of fluff still that needs to be washed out in crypto. You look at a lot of these L1s at crazy valuations, multi-billion-dollar valuations that are barely being used. So there's a lot of these projects from the last market cycle and from prior market cycles that frankly need to get washed out. I think you're going to see a lot of them sunset. It was a lot easier to grab VC funds, get a lot of funding before. I think people are getting wise, man. I mean, this whole promise of the blockchain and granted, blockchain technology is going to be used very heavily, but you've got Ethereum, you've got Solana, but some of these are going to form their own blockchains, their own privatized blockchains. So while the technology is going to be adopted, it doesn't mean that some of these L1s, these older L1s in particular, are going to come back and ever get anywhere near their all-time highs. And I think a lot of them are going to shut down, frankly. Their market caps are not justifiable, in my opinion. And he said something very interesting there, I think important to note. Until you can outperform Bitcoin and Ethereum with a different basket, well, guys, I think DePIN is very different than any other basket we've seen. These are real businesses being built here. Now, some of the early stage DePIN projects, I don't think will ever hit their all-time highs again. Okay, I've talked about this before. Not to say there's not potential upside for a bounce, but I think it would be more of the same what he just talked about, where, okay, Bitcoin and Ethereum surge back up, they're just going to follow that. And his point is, why take on that risk if it's just going to mimic what the larger caps are doing anyway? Okay, there's no way to capture additional value there. So the question is, will we see some DePIN projects outperform and decouple? I think so. I think GeoNet's already starting to, actually. Let me pull up the GeoNet chart. I want to talk about some additional projects and talk a little bit further about this. Let's go here. Let's go all time here. Guys, this chart looks very different than most DePIN projects. Most you see had one big surge up, came back down. That was around March. You saw another surge up, come back down right around here in December. GeoNet moved different than all of the altcoins, having a huge surge in January. That was way after everyone else. They had another big surge here in May, right? They had a second surge here in April after the market topped last March. They've been very thoughtful in their early stage dilution, and that's one of the key differentiators from some of these other deepened projects, but they also have 80% of their revenue going to open market buys. I think we are seeing the first deepened project truly decouple. And I think that is what Mr. Wonderful is talking about. Which basket, okay, can decouple and outperform some of these other assets where the risk is worth it? And I think that this is what we're seeing right now. Now, the question is, will we see other projects follow suit? I mean, you guys know what my thesis is here, and I've talked about this, but I've narrowed down really to like 5 or 6 main positions in deepen. None of them are old projects. GeoNet is like the only one that I would say is an older project. It's been around for multiple years. The rest are newer projects, and they had 2 things going for them. Because let's be real, in 2024, we saw some of the newer projects do very, very well. Your demos, your hive mappers, but they had the same fate as Helium has. Okay, not to say they can't have a bounce back. I personally, and maybe I hope I'm wrong, I don't think they're ever going to get to their all-time highs again. Full stop. I just don't see it. I think you could see them bounced from where they currently are, but a full decoupling is going to take a long time, at least, in my opinion. I think that GeoNet has decoupled, and I think there's a handful of other newer projects that have a chance to do so, plus offer that short-term upside that we saw with HiveMapper the first time around, that we saw with Helium the first time around. And of course, I look at what's happening in the Web 2 space and where there's crossover and where that money's flowing. It's what I did back in 2022, 2023, and 2024. We saw GPU networks do quite well because of the AI trade. I think that we could see a resurgence there, but the main things are robotics. We're seeing massive amounts of money flow into robotics. I know I've talked about this so many times, but you have Aoki Network, right? That's one, by the way, I just interviewed. I have some posts on them recently. Newer project, token's only a year old, right? It's been beaten down because of market conditions. They have actually, Nils, their CEO, said that they have a very good chance to be profitable within the next 2 months. That's something that's unheard of in the crypto space. So you start thinking about some of these early stage projects. They have a good team. They have revenue, and do they have runway? Okay, because you need to make sure they're able to make it through these trying times. Aoki's one that can. The other thing I'll say, and I haven't talked about this one really, this is based on a Masari report that just came out. I'm talking about how Deepen's a $10 billion sector generating $72 million in revenue. In particular, though, they brought up Grass. Guys, Grass hit $12.8 million in Q4. That's kind of insane. And when you look at their market cap, that's a $50 million ARR rate, obviously up 8.5% because it's on that news, but $134 million market cap, that's not even a 3-to-1 market cap to revenue ratio. That's kind of crazy, man. The question, of course, is that revenue sustainable? Another one, though, Silencio, right? They just announced this today. They're collecting data to train voice data to train AI models. They're now trying to train human emotions. So you could go, they have new campaigns that are being launched. There's a qualification process, but you're supposed to read it in a certain manner that would be a read into human emotions. They're trying to train AI models on this. Guys, this is one that they're on track for potentially $10+ million a month with some of the campaigns they're running and some of the demand they're seeing. You look at their market cap right now. They're sitting at like $2.2 million. These are the ones, that's crazy because they had that recent pivot, the revenue they're seeing that's an insanely low market cap for what they're doing right now. If you do, by the way, I'm really bad. I always forget to do this. Referral code, if you guys do sign up, ODRF3N. Okay. Let's see here. 375 AI. This is one that's really been very frustrating with their price action recently. And there's still this weird shit going on right now. Look at this. Bitmart, $622,000 in 24-hour volume. 70% of their volumes on an exchange with zero liquidity. There's something weird happening with this. I don't know. I hope they figure it out, but I've never seen that before. There's that big sell-off that took place. Something messed up is happening with this token, and I don't know. Bitmart, I actually did some research. There's some shady stuff going on that's like other shady stuff with Bitmart in the past with other projects. So somehow or another, someone is using this exchange to, I think, arbitrage this token somehow, and it has not been good for the price. But this is one that plenty of runway, guys. They're founders, and they raised $10 million. Their founders have deep pockets from their past endeavors. And I look at the potential market cap. This is one that, looking at its current market cap, these are ones that in a couple of years could be 100x. Like, if they get to the 9 figures in revenue that they're looking to get to, this is something that CEO's done with other companies before. These are the ones right now that you're looking at while the market's down. Not to say we can't have further downside, of course, but these are the ones that, DCAing into. This is what I'm looking at. Having some patience. These are when you hear people talk about, well, I go to 100x. That's when we're in extreme greed. People talk about that, but that's not when. It's not like they bought then. They bought in the down periods like we're in right now. Some of the most depressed prices we've seen after October 10th, seeing a situation like that. It's like after FTX, those are the prices that gave people those 100x's, in some cases 350x, like we got with Nasana. So this is what I'm looking for. I do want them to figure out what's going on with that exchange, though, because that's messed up. The other thing I did touch on is the data center play, the AI GPU projects. I've talked about this quite a bit, but energy constraints are going to be a problem for AI data centers. We have another one just outside of Chicago, Illinois, paused. The build out of a data center paused because of the energy infrastructure. This is something we're going to continue seeing. We had the Treasury Secretary, Scott Bessent, come out and talk about blockchain and GPUs and how that's going to be instrumental. As we see more workloads move from training to inference, you're going to see, I think, some of these GPU projects come back in a huge way. It's going to be so obvious in hindsight. We're going to look at some of these prices that we're looking at right now, and people are going to be like, damn, we should have looked at those projects. I'm talking about Eurocash networks. I'm talking about Nosana. I think IONET's another one that's interesting. They revamped their tokenomics recently. These are ones that should be on your radar. And again, could we see a resurgence this year? I mean, the things are coming together that it could happen for sure. The Fed, change in May. We're seeing rate cuts. We're seeing liquidity through QE enter markets, right? We're seeing the DXY drop. We're seeing Russell 2000 break out to new all-time highs. This is a great sign for risk on assets. Certainly. The question for me, though, is the trust too broken from 1010 to where that's still overwhelming and people aren't ready to come back yet, right? Liquidity will win out eventually, but it could be still some time, right? So that's why you look at these projects. Do they have runway? And, can you afford to have the patience to wait this thing out? I mean, that's what it comes down to. And that is, those are the ones that I'm looking at right now. I'm DCAing, I've been growing positions in, but you have to, plan for all different scenarios that, yes, we could see a major surge up here anytime, but we could see that trust is so broken that maybe we have a longer period where it's later this year that we see things really turn around. I hope not, but it's a scenario that could play out. That said, I still think when you look at, the top 100 projects and you look at the valuations of some of these, man, The ones that we're covering, I think, are so well positioned, and you have to be very careful with the low caps, obviously, but um, I think the ones that we just talked about, I just talked about right there, are so differentiated from a lot of the low caps that, to me, I was talking to one of my buddies about this. I'm like, I don't know when the trust is going to be rebuilt and things are going to flip around. I hope it's soon. But I was like, I feel so confident in the bags I'm holding that that when it does turn around, I'm going to make a freaking ton of money. Like in 2024, right? 2024, by the way, was a great year. We had to see this. We saw the greed index hit 90 twice. This is very rare. That doesn't happen that much looking back historically. A lot of people are still under the impression that we never had an alt season. And I think they're positioned in the wrong ones. Like, I would not want to be holding projects that topped in 2020 and 2021, especially L1s that are still sitting at crazy valuations. Like, there's no way. I cut a lot of those positions last year, consolidated, took losses on some of them that I was holding since the last market cycle. You want to be where the money's going to rotate into the newer projects that have a lot of promise, that have learned from the mistakes of older projects. The ones I just mentioned are all falling into that category. But when things do turn around, guys, make sure to pay attention to the fear and greed index, because as hard as it is to invest when the times are down and like this, it's just as hard to not be greedy and to make sure you're taking profits when the market's up. Okay. And sometimes that's actually harder, frankly. So I'll be very open and transparent about when I am taking profits. I did in 2024, not as aggressively as I'd hoped. I should have. I'll say that much. I think we're in the same camp as a lot, but I will say I was better positioned than probably 99% of the crypto industry in 2024. A lot of people were frankly got wrecked. Hive Mapper did a 34x, even Demo did a 15x, Nosana did a 350x, Helium did a 10x. Like those, if you were in the right positions, you did very well. Most people weren't, right? Most people were not in the right positions. When you say it's really hard to take profits and not fall into FOMO, bro, for reals, because I mean, even in some of my videos, it's like, I mean, the amount of money that I was up and made on Hive Mapper, you still are like in your mind, oh man, if I do a 10x from here, I'm gonna go buy an island. You know what I mean? And then people in the comments are like, "What? You're gonna, in like a few months, you're gonna make, $10 million." And it's like, these things start getting in your head. You forget to touch grass, and you kind of lose touch sometimes of just how much money that is. And the goal really should be to, yes, these are more risky assets with crazy outlandish potential returns. The goal should always be to differentiate, though, because you need to, in my opinion, like, Bitcoin obviously is a long-term hold, but, in 2025, if I didn't have my traditional investment accounts where I was positioned in silver, did really well in silver. I was in iron, was another one. And I covered gold and I covered copper and a lot of these last year. Those did very well for me and kind of softened the blow for crypto in 2025. So it's really, really important to diversify into different asset classes. I think crypto will catch up, right? It's just a matter of when. And screw CZ, frankly. Like, you're seeing on the timeline, people are very angry with him right now. I don't know why now. Like, it's been like months ago we knew about this. And also, I think it's fair to say, like, look, Trump was bad for crypto in 2025. Like, especially alts. The meme coins he launched sucked a lot of liquidity out of the market. The regulatory stuff, now this could change. Some of the regulatory stuff that's being passed could have some major tailwinds down the road, where I think the long-term impact could be very, very good. But I don't think anyone would argue at this point that he was a net negative. He pardoned CZ the week that that 1010 happened. Like, that's crazy. You know what I mean? But I do think if the clarity bill passes, things can change very quickly. But I think it's really a matter of being positioned in the right ones, which we've done a very good job of, but also knowing, having a good profit taking strategy. and playing the volatility a bit. But brighter times ahead, guys. Whew. That's all I got for you this evening. I should have the Aoki interview up in the next like few days. It was a pretty long discussion, so I'm getting in there, making sure I have everything edited properly so it's flowing well and everything. That was a great discussion with Nils, though, man. That guy's pretty brilliant, I must say. In love what they're building over there. So, Aoki, Rover, GeoNet, 375 AI. That you need to train with some smaller investments and maybe smaller gains and find that works for you to stick to it. Without some training doing it first, it's so easy to make mistakes. And yeah, I mean that's true. I mean, look, I don't think when you're looking at your overall in portfolio, you shouldn't have if 70% of your portfolio is in low cap deep in projects. I mean, I guess if you have a job and you're to worry about that money, and you can kind of say, hey, look, I'm going to put this there, and if it's a year, maybe even like 2 years before things go crazy, I mean, then I would say you're fine, but it shouldn't be like a massive percentage of your portfolio, in my opinion. Like these are still, low cap projects, but I think that these will crush it. You said F Hive Map or Long Live Rover. Yeah, I think Hive Mapper had their tokenomics too closely structured to what Helium did. There's too much dilution up front, particularly with investors and employees, in my opinion. And also, they had some missteps, man. I mean, I think Ariel did a good job of getting Web2 customers and building. Like that's what he wanted to do. I don't know that they were necessarily well suited or prepared for the Web3 aspect, and most aren't. Most of these people come from Web2 into Web3. Like being the owner of a startup is already hard enough, and executing on that, the Web3 component is, we're kind of paving the way as it is, but it's a very difficult aspect to introduce. And I don't think that anyone would argue that they did things perfectly on that front. And I think Helium, obviously, they had too much dilution up front too, in my opinion, and they're going to be fighting that battle now for quite a while. So to me, I'm more inclined to focus on some of those newer projects like I was just talking about. And Solidia is another one in there. Low caps, product market fit, solid teams, runway. Haven't had that big moment yet. In those areas, robotics, data collection, energy. So any like data collection, especially that can be used to train AI models, like Rover. Rover is going to be training. So it's new physical data that's being collected. That's something that hasn't really hasn't been in the forefront yet, but will be. When people start realizing these LLMs have scraped most of the data off the internet, and you look at robotics, so self-driving vehicles falls under robotics. And the data that's necessary to train those, most people are completely unaware that there's just not enough data out there. I think DeepIn's like the one way that you can get that data at the scale that you need to. So that's gonna start really, I think, getting highlighted here. But they also it's fair. You have to point out they have a fair amount of dilution coming up. So I think to see crazy upside with that project, we need to see a move sooner than later. Otherwise, you're gonna have to temper your expectations a little bit on the upside. Not to say there isn't. I think there is, but I think that there will be limited upside. They're gonna have a lot of dilution where they're not gonna be too different as far as how much supply is out there floating than what HiveMapper is seeing right now. The difference I'll say is that I don't think the employees are going to sell off the way we've seen HiveMapper employees sell off. You look at GeoNet's a good example. They're very closely tied. I think that's less of a risk, personally. I don't know if people are saying that, but and dropping Web3. I think that a lot of the money they raised was for tokens, so I don't know if they can just drop the token on that, frankly. And like, you have B maps. I'm sure they're doing very well on B maps. Like they've got also a lot of customers are coming through. So the revenue that's coming in on those contracts, a portion of that flows through to the protocol, of course. But I'm sure they're making very good money up there. So I think they need the token to get the data that's necessary. Certainly they brought on fleets, but they still need the crypto contributors if they're going to keep that thing going. And without the data, BMAP doesn't exist. So they need the protocol to succeed. Let's see here. Hopefully it's the token. Well, yeah, token price has been freaking down. Everything has been, in fairness, but too much dilution, too much sell pressure, man, in my opinion. But again, we can see that fly up. I mean, like, you got to think about this, though. Remember when the Coinbase listing happened and it did like a 34x? None of the token unlocks to the team or early investors had started yet. So the float was very low. It's kind of like what we have with Rover right now. But the problem is, for Rover, if we don't see a huge surge in the market rebounding here, and it happens 2 years from now, I don't think it can have that moment like we saw with High Mapper or that 34x. I don't think it's possible because the dilution will be too much. So we got to hope that comes soon. But like some of these other projects, you don't have to worry about that dilution. That's one of the things I like about 375 AI so much. We don't have any team or investor unlocks until October of this year. And then it's a 3-year vesting schedule. You don't have to worry about that dilution. As far as where the sell pressure is coming from right now, it has to be, because there wasn't that much dilution from the airdrop. I think a lot of those people sold that farm the airdrop. It has to be like a market maker, or again, somebody has found a way to buy tokens and then sell them on that exchange in some manner that they're arbitraging it and finding a spread there. Because 600,000 in volume on an exchange with no liquidity is crazy. It doesn't make any sense. It's painful, but at the same time, like, well, if you had the patience, and I'm in a situation where I'm like, I have the patience on that one, like, and I know what they're building long term and where that revenue is going to go. Guys, look up Harry Dewhurst and what he's done in his career. The project founders matter. Some people have it and some don't. Full stop. Like some people, I've worked for startups. I've had a lot of CEOs that were dipshits, dude, that ran the company into the freaking ground, were just dumbasses. They love to talk about how they're a CEO. They were charismatic, but they didn't know shit about running a company. Then you have the CEOs that know how to do it, right? That are heads down, that know how to make it happen and have proven they can make it happen. Harry's one of those guys, y'all. So to me, that's as important as anything. So, if you have a year or two of patience, which I know most people in the space don't, most people have like a month of patience. That's why I keep adding these prices, because I look at the long-term viability there. But you were talking about the Bay Area, the HTC original. I mean, yeah, it depends on how many tokens you're receiving in comparison. But here's the deal, y'all. Like, there's still a lot of tokens in that pool that can go to contributors. I think they still have like 3 billion at least. If they're not getting the data collection they need, they might have to get more aggressive there, and that's something they can do. So I wouldn't be surprised if you see a boost in rewards at some point soon. I think it's going to have to happen. And honestly, like if they want to get the data flowing still, they've got to do something there, and they've got tokens to work with. So I don't know why they wouldn't. Oh man. And Gabe's no longer there. Gabe can't screw us anymore. That fucking guy. Oh Lord. Anybody have any other questions before I hop off here? Get that Alki one posted. Had Ex Machina on yesterday. That was a pretty interesting conversation about what they're doing in the robotic space. By the way, y'all, like, study up on robotics. If you missed the AI trade, research robotics. Like, go to the Ex Machina blog. It's the next big move. China is already like way ahead. We're going to be playing catch up, but it's going to happen quickly. Educate yourself on robotics. You'll be ahead of the curve compared to everybody else, guys. There's going to be a lot of opportunities there. Not just like, the manufacturers, but there's going to be, parts manufacturers. There's going to be software developers for the robotic space. There's going to be companies that go on and service these things. Like there's going to be a lot of different opportunities, investment opportunities with this stuff. So educate yourself on robotics as much as you possibly can. It's like where AI was before the ChatGPT moment. That's where we are right now. Yeah, like you said, CEO spending money at $1,000 a day hotels over Christmas while company lacks money. Guys, there's so much of that in startups, and it's probably even worse in crypto. There's so much of that, just negligence, horrible CEOs that have no idea what they're doing. I worked for a startup in DC in the drone space. I think I headed up the drone division, literally developed products there to hit my quota because the products they wanted me to sell were not competitive, and created a product from scratch, cold called all the top commercial solar developers in the country, landed 6 of the top 10, found a drone pilot network to tap into, found on Upwork a service out of Malaysia to take a 3D point cloud into CAD. Guys, like, pulled this whole thing together, and my CEO came over one day and he's like, you should really consider, taking a gym break, at noon every day. I always get out there. I'm like, fucking bro, I don't have time to go to the gym in the middle of the day. Like, I'm out here with your only profitable division. You don't even know what I'm doing. You have no idea like what I'm doing for the company right now. Absolutely, like, so disconnected. It's crazy. There's a lot of that out there, man. But anyway, I think there are brighter times ahead, guys, but you got to develop your own thesis, delve into the research right now. People think, DeepIn's dead. I think a lot of the DeepIn projects will absolutely fail. There's no doubt about it, man. It's like the startup space back in the 90s, with the internet.com boom. Some of them did really well. And I think it's just about, finding those projects that are going to do really well. And that's one thing that, based on, what I did in 2022 and 2023 and what I saw in 2024, like, that was something I did a really, really good job of. And I think my thesis on that has only gotten better. I have vastly improved my understanding of market psychology over the last year in macroeconomics. So I can add that to the fold and manage risk better in understanding how to preserve wealth and then use that to capitalize in downtimes like this. Like getting no call the whole week from home. Like getting no calls whole week from home. I don't know. I'm not sure what that means. Oh, that's disconnected. Yeah, completely disconnected. Yeah, man. Some of these CEOs are crazy. So look into these people's past. I look at their LinkedIn, see if they've been able to execute, man, because there's a lot of pretenders out there too. They're bullshitters. So look into their actual work history. You can find, like, Harry was on Forbes 30 under 30. I found, like, news articles. Like, I read, and I do that type of research on all these founders, because you gotta see which ones can execute, which ones are real. I can't begin to tell you how important that is, because also with, like, the Clarity Act, hopefully we'll have more extensive reporting requirements by these projects. But right now it's kind of like a trust me, bro. Like, you have to trust that the numbers they're giving you are true, and you don't have the protections that you have with traditional equities. So it's really on you to do the research and really dive in. That's one thing I have to say, like, having a channel and working and interviewing them directly, I can ask some of those hard-hitting questions, especially, like, a lot of these guys, when I'm not interviewing them, I have, direct conversations with them, so I can better understand what they're working on. But I also can gauge, like, if they're real or BSing, So I get a little bit of extra insight there. I try to share that stuff here, when I do my live streams and the reasons why I'm investing in these projects. But that stuff's super important, man. He's like allowed Joe. Interestingly, Joe hit me up like 6 months ago and was asking which robotics depends I was bullish on. Joe's pretty dialed in too, even though he's been like active in the crypto space. And he's a little jaded. I think most people that have been in the space a long time get jaded at some point, but I think he sees the robotics, what's happening there too. It's so obvious to me right now. By the way, I mentioned earlier I took some profits on my silver position and moved into copper. And I'm looking at mining companies too. But if we do see the expansionary period that we're hoping for in the economy, copper should do quite well. It's going to be really necessary to build out these data centers, to build out the electrical infrastructure. We're probably going to see some major shortages on copper. So that's more, and also a longer term, minded investment. But I think copper can do quite well, in particular the miners, because the miners, something we're going to see with silver probably, and we've seen this in the past. When silver skyrockets the way it is, you see mining companies will expand production, right? So that could put a cap on the price of silver as more silver is mined, but the mining companies can do really well, right? So you can find that the mining companies can actually very much outperform the underlying asset itself as they ramp up production. So that's something I'm looking at too, is like copper miners, uranium miners, enrichment companies, uranium enrichment companies, because we're going to see a lot more nuclear. The energy trade is going to be huge this year as we see more announcements about these AI data centers being delayed. We're going to see the president talk more and more about the electrical infrastructure. He's already starting to mention it. Those are the ones to be looking at, guys. Like, what components are necessary to get the energy production and to build these these data centers that are going to be scarce. Like that's what to be paying attention to right now. Hell yeah, see, German copper producer, yeah. So those are the ones. When I get back to Chicago, there's a book I read. And that's why earlier last year I talked about a lot of this. I talked about gold, silver, uranium, copper extensively on a few live streams. There were a couple of copper mining companies that were on my radar that I'll when I get back and I have that book in front of me, I'll cover that again when I get back to Chicago. A lot of this stuff that guy predicted, like he's like, it might be a few years before it materializes. Like, bro, it happened like the next year. So it happened a lot faster than he expected. But that's why it's important to like not just get your news from excellent investment thesis, like from like the news and economists. Like read these books. These guys are well ahead of the trends before they happen. Last year, I read a lot of macro econ books. I make it a goal to read at least 10 pages per day. Did a lot understanding how central banks work amongst each other. It's like when I covered the DXY stuff today, like I read a whole book about that and like how our central banks interact with other central banks and how the exchange rates matter, for exports and for your economy and manufacturing, but also just about the history of the dollar and history of quantitative easing and understanding, the Fed chairs. Like there's one book that went into Jerome Powell's entire, like all the way from like his childhood, his upbringing into throughout his whole career, up to him being a Fed chair and understanding the decisions he's making is fascinating stuff. I find it fascinating. But a lot of this stuff plays into my understanding of what's happening and then my thesis on my investments, and yeah, crypto sucked in 2025, but did really well on some of my other stuff. And I covered a lot of that, on my live streams. So dude, SanDisk, yeah. Memory costs, SanDisk is like a 17x. That's the thing. Like that's the problem right now. I think that we have, and with alts as well, is like those are the returns that people would take the risk on for in altcoins. And when you're seeing a company like SanDisk in the traditional equity market do a 17x, people are like, well, why take on the risk? Why have Binance rug the shit out of us and break everything with their internal pricing system if I can just go to the equity market and get a 17x? Like, you know what I mean? And I think that's a little bit of a dilemma right now. So hopefully, I think the Clarity Act can help for sure. And I think we will still see pockets and alts outperform, but it's like, if you look at the top 100, I would bet that 90% of those never hit an all-time high again. Yeah, 90%, maybe like 80% of those never hit an all-time high again. A lot of them did in the last market cycle, 2020 and 2021. So you gotta be forward thinking, and you can't marry those old bags, guys. Like, you have to have this mindset, like .com era, find the winners. And I think eventually we'll see like a GeoNet that's like a longer term, investment. But until we see more prove otherwise, you've got to position yourself in the ones that you think can do very well, that are newer, honestly. And you can still make way better returns than you get in the stock market if you pick the right ones and the timing is right. But anyway, he said Copper was too much in football. Cooper Kupp caught a touch. How about that? Did you hear about the story about that? The Rams were telling other teams not to give him a big contract. And sure enough, he goes over to Seattle and signs a contract and then beats the Rams, catches the Super Bowl, or catches the touchdown in the NFC Championships on his way back to a Super Bowl. It's like, well, how to turn tables. That's a cool story. I like Cooper Kupp. I like Stafford, though, too. I kind of wanted to see him win, but it is what it is. All right, y'all. Well, if y'all don't have any other questions or comments, I'll hop off here. I'll be... Great story, right? I loved that. I was like, that's funny, man. Yeah, he gave the big FU to his old team. He got a pretty big contract, 3-year, like $45 million, maybe something like that. I think it was that much. He got a pretty nice contract with Seattle. But Jackson Smith, man, whew, that dude won some fantasy leagues this year, baby. It was crazy. All right, y'all. I will be on the Demystifying DPIN space tomorrow. And we'll be on the happy hour tomorrow night. So we'll talk, I'm sure, about some of the stuff I covered today. But appreciate y'all. Deuces.